So as you all know, this is a real estate opportunity, and real estate does have risk, just like any investment opportunity. Now we're going to show you how we mitigate these risks with this opportunity. So let me go through the table of contents. These are the areas that we're going to be covering. And I see a bunch of you just loaded on there. So make sure you put your questions and comments in the bottom there in the chat, and we'll get through those as we go. But let me go over the table of contents for you right there. First, we're going to go over the team and explain about the team and what the value is being brought in from the team. We're going to talk about the executive summary. After we cover the executive summary, we're going to go over the business plan and the financials, what makes this so exciting for us. And then obviously, Dave and the team is going to cover the property, the value of it, and why we leaned on this property. And then we're going to cover this market, which I've been asking to be in this Northwest Arkansas market for a while. So I'm super excited to be on this one, with this team. So let me go ahead with that. No further ado, I want to go ahead and bring Lee on to go ahead and start explaining about the investment here. Lee?
Thanks, Jim. We're very excited to be here. Thank you for joining us. And yes, scan the QR code, follow along. There'll be multiple opportunities to do so. So I'm going to introduce myself. My name is Lee Fjord. I originally started as a property manager and then became a broker with a company called Marcus & Millichap. Currently manage around 35 million assets under management. This will be my fourth deal with Charlie Peters, and I'll be running the asset management side of the deal, overseeing that. Currently asset manage several projects and have a history of success doing so.
And I'm Megan Fjord. After serving 9 years in the U.S. Navy, I transitioned out in 2017, got my residential real estate license, and began investing in real estate shortly after that. And then I met Lee in 2020, and we've been investing together ever since. I'm also going to be assisting with the asset management.
Hi guys, my name is Colby Carlson. I am also going to be assisting with the asset management. I've been working side by side with Lee and Megan for a little over a year now. I have been seeing this team work for the last couple of months, and it has been unbelievable, the steps that we're making. I'm really excited about this team, and I'm really excited about this deal.
Hi guys, Dustin and Christy Preston here. I got my start swinging a hammer, and then we jumped into real estate about 8 years ago. And we've been doing that and owning VRBOs and kind of a lot of investment, and we've jumped into multifamily recently, and we're just excited to be a part of the team. And I will be doing risk management and going out to the property to really just make sure that we're up to date on all of our insurance stuff, and we take care of a lot of those aspects. And I'll turn it over to Christy.
I am Christy Preston. I have a background in accounting, and I've been in the real estate industry for about 10 years or so, 10 years plus or minus. I've managed multiple real estate funds in the past, and I will be helping with the investor relations team with reporting, distributions, and all things money.
Hey guys, my name's Charlie Peters, Alliance Capital Partners, and I am the lead sponsor and key principal on the team. I always like to say my simplest introduction, I bought my first multifamily property in 1996. Been an owner operator ever since then, well over 2,000 units that we have touched over the years. This will be my 28th multifamily apartment complex. Very excited you're with us tonight.
Hi guys, I'm Dave Carlson. I've been in construction management for somewhere in the neighborhood of 40 years. I've built numerous multifamily properties, and we've done some repositioning of multifamily properties as a general contractor. My part of this team, this amazing team that we're working with, it's unbelievable, the teamwork that goes on with this team. But My part's going to be helping with the asset management and keeping everybody in line on the renovations.
Yeah, and hey team, I'm Jim Bone. I already got to meet you a little bit through the intro. But my wife Claudia and I, as a lot of you know, we're with Our Tribe holding company, and we have asset managed for multiple multifamily as well as self-storage, as a lot of you already know. And we've been doing this for a little over a decade. So we're excited to be putting this together. My role in this team is the marketing manager and helping make sure that everything runs smoothly throughout the entire travel of this journey that we've been on.
Hey guys, my name is Jake Dean. I have been in the real estate industry almost all my life. I've done fix and flips, renovations, wholesale deals, everything, and owned a mortgage company back in 2000 to 2008-ish. What I'm doing here is I'm here to help with the investor relations and make sure that we are compliant. So all of us stay out of jail, which is a good thing. This is my second deal with Lee, so I'm excited about that. And we've murdered our first one in the best way possible. So I'm excited to see what we do on this one.
Awesome. So I'd like to start off with our core mission. What we do is we create value for everyone we work with. We purchase poorly managed, underperforming apartment complexes and implement professional business practices to improve the living conditions in our communities and increase the quality of service provided to our residents. By transforming our apartment complexes into safe, high-quality homes, we drastically increase the value of our properties, providing a substantial cash-flowing investment opportunity for you, our partners. Next slide.
All right. So I just want to walk you guys through a few of the things again. It's to make sure that you guys do know this is a 506C opportunity. It's open to only accredited investors. The opportunity is filling up rapidly. So once we're full, we're done. So make sure that as we're going through this presentation, that you go ahead and click on the QR code and find your way into the portal. And we'll walk you through that a little later, but it's pretty simple to walk through. It's about 3 easy steps and you're in and pledged into the group. And all funds, we just want to make sure you all understand that all funds will be wired by May 5th, Cinco de Mayo. So to start that process through the cash flow portal, you'll go ahead and do that through the QR code that'll pop up about every third screen. After you click on that, make sure you also put your questions in the chat there. So let's welcome Lee back. He's going to let you know about the deal.
All right, everyone. So what is the absolute number one, number two, and number three most important thing about real estate? Location, location, location. And this place has it. So Northwest Arkansas is a region that is exploding with growth and opportunity. Why? Why this place? Well, first of all, the 4 logos that you see up there on the screen are only the largest companies or organizations or people in this area. You have Walmart's world headquarters, Tyson Foods, the largest poultry producer in the world, J.B. Hunt, a huge multinational, multi-billion-dollar trucking company that has trucks on every highway, and of course the Arkansas Razorbacks. This is a market that is growing. Why? Well, surprisingly enough, you know, this area draws people for not only these companies, but other reasons that we'll go into more detail on in a moment. The amount of growth has been equal to huge growing markets that you probably have heard of if you haven't heard of Northwest Arkansas. Places like Orlando, Raleigh, Tampa, so on and so forth. The difference is we're not buying this for a 4 cap like you would in Tampa or Orlando or one of those other markets. This is a market that we see the same amount of growth, but I think we have a much better opportunity here. It's a 6-minute drive to the University of Arkansas. And, you know, we have basically our neighbor, a 16-minute drive away, is the #1 Fortune 500 company for the last 10 years in a row. And it's also doubled in size in the last 20 years and is set to double in size again in another 20 years. So move on to the next property or to the property description. So the overall arching asset is 128 units. The average square feet is over 900. There are 12 separate buildings and it was built in 1973. Like I said, it's a 6-minute drive to University of Arkansas. And even though it was built in 1973, we did extensive due diligence on the property and we found no reason to not move forward. The property does have copper wires and, you know, breaker boxes, and the roofs were put on in 2014, and you know, all of the wonderful things that are aspects of this asset that you don't necessarily usually find in a 1973 asset, like double pane vinyl windows. The seller purchased the property a few years ago and they invested $1.3 million into mostly the exteriors, removing all of the former deferred maintenance from the asset. So you'll notice that we do not have to spend a lot of capital of your money on things that don't increase the rents or the value. We're spending them directly on things that will truly increase the value of the asset because the seller already took care of most of that for us, including remodeling his
Please
version
don't
of
do that.
59 units.
Oh my goodness.
So the best part about it is that this asset is 94 townhouse. So we're just buying 90, 100 units, 75% are townhouse. So now we're going to move into what does the investment look like, and I'm going to have Jake walk you through that process.
Thanks, Lee. So we are seeking a total of 5.85 million with a minimum of $50,000 per investor. We are also going to give you an 8% preferred rate of return. So as you know, you're going to get paid on cash flow throughout the project and then on equity when we sell the project. We're excited for this. If you look over to the targets, we actually have a range of targets. The reason we're doing this is we're giving you a worst case scenario, which is the 21% ARR and the 17% IRR with your 9% cash on cash. But what we've done is we've built an exit strategy and a business plan for that person who comes in to purchase it behind us. We're actually going to add a washer dryer unit to one model of every floor plan to show them what they could receive by adding a washer and dryer hookup to each unit. If we do so successfully, we're going to show a much higher rate of return, an average rate of return and IRR as well. The benefit of that is that we're thinking forward, thinking that, hey, what will it take to really sell this at a higher value? And if we can, and as we show that this is a proven system, they will be able to come in, implement that for their tenants, which is going to be able to force their appreciation higher. So we're going to get a higher appreciation on sale for us. We're really excited about this idea. It's something we've talked about. And as someone who comes in to buy properties, if someone has a business plan set up for me already to say, hey, if you do this, you'll do this. It makes it a guarantee, or not guarantee, but it does sweeten the pot for us to come in to buy the property. So we're excited to implement that. We are selling everything right now is on a 6.5% cap, and we're looking to sell at a 6% cap, which is a very conservative return in the state of Arkansas currently. Jim, you're on mute, so it's okay.
Sorry about that. If you guys have any questions up to now, go ahead and drop those in the chat. Looks like a few of you guys are excited to be here. We can talk self-storage another time. We're super excited about this project. Jake, did you want to cover anything else at the moment? Or are we good there?
I actually got a question, Lee, if you want to chime in, and Charlie as well. Everyone wants to kind of know what are some of the tax benefits? Do we do cost segregation?
Absolutely. So we will be utilizing a cost segregation study in order to maximize the amount of depreciation we can take on the front end of this investment. So through accelerated depreciation and bonus depreciation, we will be able to reward our investors with a massive tax deduction in year one on their K1 in the year of purchase. So, if you have additional questions about that, you can always jump in and ask them on a side note from one of our partners. So happy to cover that on a side note, if that is something that you are looking to get more information about, is cost segregation study and
Mhm.
bonus depreciation.
Charlie, do you have anything to add?
No, I think that sums it up really well.
One other question I just got a text, if that's cool. What happens if worst case scenario, we're not able to sell in the 5-year period of time?
So if we don't sell in 5 years, that's perfectly fine. If the timing for our exit doesn't align perfectly with the marketplace, we can keep the asset without having to make any financial decisions whatsoever. The loan that we're assuming carries with it an ability to stay in place for up to 6.5 years after we close. It was a 7-year loan put in place by the seller. So actually assuming a loan that already has been negotiated. So we have no interest rate risk with this asset whatsoever. And the terms of it are amazing for the next 5.5 years after we close. So all we have to do is hold on to it. And for an additional 18 months after our 5-year planned exit, we don't have to do anything except for keep the property and make sure that it's running it properly.
So it looks like a couple more questions, either Lee or Charlie or Jake could probably address this one. The first one says, are you accepting funds for 1031 exchange at this time?
No, unfortunately, we're not. But we are offering the ability to take advantage of that bonus depreciation, which will offset any of your gains. Right now, we are in a period of time of very low capital gains rates. So I have an accountant that advised me to take advantage of the bonus depreciation as opposed to doing a 1031 on my last deal. I'm not an accountant, I can't give you advice, but I would highly recommend into using or taking advantage of accelerated depreciation, bonus depreciation, as opposed to a 1031. It is another option.
It's worth exploring both.
They're definitely so Charlie, go ahead. You're more expert on this.
No, I was just going to say that question is absolutely a math problem. You can put hard numbers on it. We did the same thing. We did the potential 1031 exchange, which we canceled and brought into someone else's actually syndication, where we will receive that bonus depreciation.
Okay. Thanks. That covers that pretty clearly. So it looks like also a couple of questions about the 5-5, the Cinco de Mayo deadline. What you'll need to do is you'll just need to make sure that you do have the QR code scanned, and you need to have the process started. And get with the person that invited you here, and we'll talk to you about that a little later, how to get that all taken care of. So another question that wants to find out, either Jake or Lee, are you accepting self-directed IRAs at this time?
I'm sorry, say it again. It broke up on me.
Yes, we are.
That's okay. Are you accepting self-directed IRAs at this time?
Yes, we are. And we can help you with that process. We have team members that we can put you in place with that will help you, transition it from a self-directed, which most people think is, hey, my accountant makes the decisions for me, to actually true self-directed, where you control your 401k and your IRA. So we can help if you don't have already that already set up.
Okay. All right. So I think that covers most of the questions right now. Appreciate you guys putting those in there, and let's keep those going. And at this time, let's go ahead and get this over to Colby. He's going to go into further details and explain the business plan. Colby?
Awesome. Thanks, Jim. So one of the first things we noticed when we went to go do our due diligence process on the property is that the property is absolutely gorgeous. There's nice mature trees. There's tons of open space. With those townhouse units, they actually have a front door and then a back door, as you can see in that bottom right-hand picture. So one of our first plans that we plan on doing is going in and actually adding private backyards to each one of those townhouse units. So we plan on putting a 10-foot concrete slab and then a 6-foot cedar fence all the way around, allowing the tenants to have any type of security or any place to store stuff, put their nice grill out, let their pets out, whatever they might need. We think that this is going to be a huge value to those tenants. There's nothing else like this in the marketplace. And if there is, they're not at the price that we're offering. We think that these are going to be a huge value to the tenants. We're super excited about this plan. One of the other things is that the current interiors, some of them have been updated, and the previous owner did do a good job of updating them. The other units have not been updated and are pretty worn. So we plan on taking those worn units and bringing them up to our highest level of standard. And then we're planning on bringing those subpar units, the ones that the seller has done a little bit to, and bring those up even a little bit more. So we're really excited about creating a full-blown community around this entire property. We plan on adding a walking path with some exercise equipment throughout the property, allowing people to walk around and really enjoy the open space that's in the area. We also think that it's a really incredible price for 3 and 4 bedroom units. So while we were out there doing that due diligence process, we did actually get the opportunity to go and tour some of the neighboring properties. And every time we walked into one of those properties and we walked out, Lee and I looked at each other and we're just like, man, this is going to be great. The plan that we plan on implementing is we're going to make these units look almost identical to these ones. And this is what they're getting for the rents. And they're not even townhouses. So that's where we think that we're going to get a lot of the value, is being able to have that townhouse with the private backyard and bringing them up to the market standard of the nice interiors. We really feel that we can push the rents on these units. Again, majority of the units in the area are also not townhouses. So as you can see in the comparables, keep that in mind when you're looking at that. This is also one of the only properties in the area that offers 4 bedroom units that isn't student housing. A lot of the other properties that do have 4 bedrooms are strictly student housing. There aren't many units that have those larger units that are 4 bedrooms or above. So you can see in the comparison on the four bedroom that our rents do plan on being a little bit higher than the comp. That is just a price per square foot difference is the only thing there. Our units are a little bit larger. We also feel that our initial underwriting has the 3 bedrooms only renting for $50 more than the 2 bedrooms. This really shows how conservative we were with that underwriting. We think we can get a lot more for those 3 bedrooms. So we really plan on under promising and over delivering with this. So I'd like to turn it over to Dustin to go into detail about the property upgrade plan.
Thanks, Kobe. Yeah, we have a really good plan to upgrade this unit, this property. As you can see on the left side of the slide, shaker cabinets, granite countertops, stainless steel appliances, LED lighting, new bathrooms, and to touch on the yards. And it kind of seems like everyone has pets or kids, and this is going to be unique. Our competition will not be able to offer yards. We went and toured all the properties. They won't be able to offer 3 bedroom apartments or 4 bedroom apartments. And then our projected collected rents over our business plan is only bringing us up to meet the rents. We're not even, even though we can offer all these good things, it's not even in there. So I like our business plan. And turning over the capital X improvement budget, I wanted to turn that over to Dave. Take it away, Dave.
All right, thanks, Dustin. We spent probably 2 days, two and a half days, about 3 weeks, 4 weeks ago, going through the entire property with a team of subcontractors, both local and national contractors. We walked through it and looked at cabinets and flooring and appliances, and what you're seeing there is all the numbers we put together. And we're actually still working on those numbers. We're sourcing all the best values we can at the moment, trying to come up with not trying, but we are coming up with some of the best flooring prices in the nation and some of the best appliance prices in the nation. So we'll be going through that budget and doing the best we can to keep it within budget. We feel like that budget that you're looking at's a pretty conservative budget for what we need to get done. On the exterior of the buildings, like Colby already talked about, we're gonna go ahead and add patio slab, a concrete patio slab on all the townhome units. We're gonna add fencing on all the townhome units, so gives them a whole lot of privacy. Just on the outside of a lot of those, we're gonna add a walking path, and a walking path will include it'll include exercise stations along the way. And then also that what we're going to add too is gutters to all the buildings. None of the buildings right now have gutters on them. So that we plan to do that to increase drainage on the property. So the plan is to make it a top-notch property that all the tenants are glad to come home to and proud to live at. So I'll pass it on to Lee.
All right. Thanks, Dave. So right now, what I'd like to go through are the top line numbers. So we're acquiring this asset for $12,425,000, or approximately 97 a door, 128 units. We are assuming a Fannie Mae large balance loan that's in place at $8,842,000 that has interest only for the first 5 years and a very, very, very low 1% prepayment penalty in any time after the 5th year. So then we are going to request for our partners and investors to come in and invest alongside us. They are going to contribute something along the lines of $5 million. We have committed to contributing a minimum of $625,000 of our hard-earned money, just alongside your hard-earned money. So we do have skin in the game on this particular project ourselves. So what are we going to do with that $14,692,000? Well, of course, we're going to buy the property. Then we have closing costs and fees involved with the transaction. Then we always, this is our policy immediately, for every property, we hold separately a rainy day fund of $1,000 per door. Just in case we ever need it, we have enough to get us through any rainy day, including a pandemic. Mm-hmm. So we have additionally the CapEx budget, a very conservative budget that is taken into account excesses for certain projects. So that's where we're going to get the money, and that's what we're going to do to it, or do with it. So here's the real fun part that I know all of you are the most excited about. It's the numbers, the spreadsheet. So the property currently has an average monthly rent of $868 a month. The seller has a current expense ratio of 47%, which is about on par with normal industry standards. And a total net operating income of a little over 800,000. So what are we going to do? How are we going to perform in our first year? So we have utilized an extensive amounts of research into the marketplaces to compare what kind of rents we're going to be using or able to achieve, and taking into account all of our standards and understanding of prior projects in the past. So in order to accumulate these numbers at the end of the day. So we believe that we can only increase the rent on average across the board at the property by less than $100 in the first year, a very conservative amount of increase. We do not believe in the first year that we are going to be increasing the other income line item across the board at all, even though we have successfully done that before in the past. So you'll notice that and we'll keep reiterating this, that our numbers and our assumptions on your returns are very, very conservative. Bottom line number, our overall expenses are going to grow $40,000 more than what the current seller's expenses currently are today. And we're going to run it at 48% expense ratio. That will leave, after we pay our debt service, almost 5% in return cash flows on these conservative numbers that we'll be able to distribute out to our investors in the first year. So in the first year, you're going to be receiving a cash flow distribution from this investment. Now let's fast forward 5 years from today. What does it look like 5 years from today? 5 years from today, with a conservative average market rent increase of only 3%. And by the way, it's much larger than that. We'll tell you all about that in a moment. But a conservative 3% increase across the board of rent and expenses, except for taxes, which you'll notice go up extremely high in year 3, because that's when they get reassessed. So long story short, we believe we can only get the rents up to $1,259. Do we think we can do better? You better believe we're going to do everything we can to do that. We're going to stabilize the property at 4% vacancy on average. By the way, the market vacancy is 2.9. And then our average across the board on properties we own is lower than this, but we have a 2% assumption for concessions, loss to lease, and bad debt. At the end of the day, in year 5, we're going to be able, after paying principal and interest, we're still going to be able to deliver to our investors an over 10% cash on cash distribution. So in year 5, they'll be, ideally, when we execute our business model, perfectly on the button, if not better, 10% cash on cash in year 5. All right. Now we have our assumptions. Where do these numbers come from? You'll have the ability to read these in detail in your own time, but there's only a couple here that I'd really like to focus on. One in particular is marketing. You'll notice that our marketing budget is probably larger than what you've seen on a lot of other multifamily real estate syndication pro formas in the past. Now, why is that? Why would we spend more than other people choose to? That's because we believe that marketing is the best dollar spent. We believe that if we can spend our marketing dollars to generate immense amounts of demand for our properties, we'll be able to actually beat our projected numbers and maintain extremely low vacancy rate. Much higher occupancy, lower vacancy equals more cash flow for our investors. And also our property manager who lives and manages the property, they live on site as well, by the way. We'll talk about that more later. They can pick and choose the tenants that they want to live in our property, not just, well, who's fog in a mirror today. So if you have high demand, you have a long list of tenants' perspectives for the units, and you'll be able to keep your property more well occupied. Lastly, the amount of vacancy that we do assume for our property. In the first year, we assume an over 7% vacancy. We've done better than that before in the past, but we believe that our number that we have plugged in here conservatively is 7%, even though the market vacancy is 3.9, 2.9. That's even better. So what do the numbers look like at the end of the day? For you, the investor, I'm going to let Christy go into that because she's going to be the one overseeing making sure your money hits your bank accounts.
All right, this is the fun part that I like to talk about. What are your returns going to look like? This chart is meant to give you an example of if you put $100,000 into this deal, how are you going to get paid? There are 2 main ways that you're going to get paid. That's going to be through cash flows and the exit or sell of the property. We project a 9% average cash on cash return, which is going to be paid out of cash flows. In the beginning years, you'll notice that it's a little bit lower because we're turning those units over, rehabbing them, and then we'll catch that up in years 3, 4, and 5. There's an 8% preferred return. That's a preferential payment. So our investors are going to receive preferred return over any of the general partners up to that 8%. After we make you whole on your 8% preferred return, then we split the cash flows 70-30. So 70% to the limited partners, you guys, and 30% to the general partners. That's what's going to make up that 9% annualized cash on cash return. The second way to earn money on this deal is on the exit. Our numbers, as everyone has stated, are conservative. After seeing the area, we expect to outperform these numbers. That's why we're showing a range. But based on the 6.5% cap rate, you're going to make $45,000 from cash flows throughout the year or each year, and then approximately $62,000 on the exit. So that's going to be $107,000 on your $100,000 investment. It's a 2.07 equity multiplier on your investment. And on the next slide, I'll show you what a 6% cap exit looks like. And this is going to be achieved by proving that in-unit washer dryer business plan that Jake was explaining earlier. So at 6%, the cash flows are going to stay the same. You're going to make that $45,000 in cash flows, but the exit is where the cap rate affects your return. So you'll see approximately a $20,000 bump in return on the exit. That's going to give us a 2.27 equity multiplier on your money, and an average of 25% average annual return, which is amazing and completely passive. You don't have to do anything. You sign up now, and then we just put checks in your bank every quarter. Now back to Jim for some questions.
Christy, it looks like it's right back to you, though. They want to know, how often do the distributions occur?
Sure. Distributions are going to be paid quarterly, and that's going to be on after the second quarter of ownership.
I love it. These folks are as greedy as me. Let's see. I don't see any other questions at this time. Go ahead and make sure that you do include those in there, or I've seen a couple of them come through my text as well. Vish, if you had any other questions, please let me know as well. And then let's go right on in to Megan. We couldn't be doing this without Megan, man. She has been making sure we are all crossing our T's and dotting our I's. So let's go ahead and bring Megan in. Megan?
Thanks, Jim. So going over the opportunity and really, starting to dive a little bit deeper into this now. We already talked a little bit about the location, but, we're really excited about Fayetteville, Arkansas, and this whole Northwest Arkansas region. As you see, it's the second largest city in the state of Arkansas. It's been rapidly growing throughout the last few years, and continues to, is projected to continue growing in the future. We're 6 minutes away from the University of Arkansas, which is a major employer in the Fayetteville area. In addition to that, once we get down into the macro, the local area, I think you're going to find that there's a lot of other businesses and investors that are also taking the same bet and putting their hard-earned money in the same area, like literally within yards, our neighbors. It's going to be we're so excited. So with that being said, we've already talked about the CapEx budget. We think 1.3 million is going to be able to get the job done. We're going to be able to, especially with this laundry play, handing a business plan to a next buyer, it's just going to really make that demand for our exit strategy just be even better. So just to recap this again, 128 total units. With that, we have this great unit mix that really caters to every single type of demographic. We've got 1 bedrooms, great for single people. The 2-bedroom, 1.5 bath townhouses, which we think is going to really be the bread and butter of this opportunity. Because like we said, when we went through and we toured all of these comparable properties, they were single floor plan layouts. At most, the most outdoor space that they had were balconies at best. But with us being able to offer private outdoor space, it's just going to be something that nobody else can really, offer. And it's going to make our property really unique. And Colby already mentioned the 3 and the 4-bedroom units. Having a 4-bedroom unit is just not something that you see around here. And our price per square foot is just amazing. So continuing with that, I'm going to give it to Dave so he can show you some photos of the property.
All right. Thanks, Megan. So just echoing off what Megan said about the townhome units and the floor plan for the townhome units. Like I said earlier in the intro, I've been building multifamily units for many years, and I can honestly say I don't think I've ever built I know they're out there, but I don't think I've ever built any townhome units. So this is truly a unique find and a unique investment opportunity. And then we're gonna add patios to those private patios to the townhome units. That's just an incredible find there. So anyway, the current owner, he's already done a lot of upgrades on it. He's added a new monument sign, upgraded the pet park, upgraded the playground equipment and added some new equipment and redone the base for the playground equipment. He's upgraded the leasing office, upgraded some of the exteriors. He's put in a new gazebo and barbecue area, upgraded the laundry room, added decks to the pool area, and just really dressed up the exterior so it looks nice just going into it. So we don't have a whole lot to do other than, like we talked about earlier, adding the drainage and the patios and the private fences around them. Then on the next photo, Jim, interiors. So the units are already, a lot of the units are already done and in great condition already. And the ones that aren't, we'll be going through and doing new flooring like you're seeing here. The units you're seeing in these photos are already pretty much done, except the one in the bottom right still needs a little work. The appliances, will be upgrading the appliances with stainless. Fixtures, where we need to, we'll be putting in new plumbing fixtures. Low flush toilets, we'll be doing new shower surrounds. Just really dressing the whole thing up so it looks really nice for the tenants and adds a ton of value. And now back to you, Jim.
All right. Thanks, Dave. That kind of sums it up, but we do have a couple of questions here. Let me go ahead and give those to either Dave or Lee. We want to know, is this going to be pet friendly facility?
Absolutely. Go ahead, Lee. You got a better answer on that.
It definitely will be a pet friendly community. In fact, we noticed when we were doing inspections at the property that an overwhelming, I don't know if it was overwhelming, that might not be the best term, but a large number of the tenants are pet owners. The community has tons of green space, as you can tell from the picture in front of you. There's tons of green space and opportunity for pets to, have a wonderful experience life there on the property. So yes.
Awesome. Looks like a follow-up on that, Lee. I'm sorry to cut you off there, but they want to know, they said for more clarification, if so, is a slab the best approach? Wouldn't grass be a better choice for a backyard?
No, because these patio areas are not meant for letting your dog out and letting it live out there all the time. A 10 by 10 slab will take up the majority of the space, and there will be a mulched area around the edge of the fencing. So they will have a place to use the restroom, but this is not a place for them to live all the time. There is a dog park on site, and we will be adding the walking path that we're really excited for people to be utilized as a walking path for their pets. We love pets for multiple reasons. I'm a pet owner. Usually pet owners means you can afford a pet and you can afford your rent as well. And also we do have a very stringent pet fee and pet, move-in fee and monthly rent policy. So it's added income as well. So we love pets, but yeah.
Also just the grass maintenance inside.
Yeah. Having a landscaper going in and mowing the grass inside of every one of the tenants' yards would be a very big headache. Yeah.
All right. And then another one, they want to know, with all the smart homes going on around, will it include smart home features as well? Who wants to address that one?
So I'll jump in on that one again as well, just because I was on the last one. We did not, we don't have it in our plan or budget to incorporate those. We do have what I would call B+ class remodel plan for 69 of the apartments. But we do want to leave some opportunities for the future buyer to be able to come in and add value to the asset as well. laundry. We want them to be able to add in smart, smart locks and all of those items as well. So no, but it is how we're going to sell it for a better value, if that makes sense.
That does. Let me go with one more and then let's get right back into it. One more question here. They want to find out, and whoever wants to address it, Lee, it might be you again. What is the current occupancy percentage?
Currently, when we receive a monthly rent roll, haven't received one for the first as of today, but as of a week ago, it was right at about 97% occupancy. So the seller is doing a very good good job when it comes to occupancy. They're still continuing, of course, to lease units, which is wonderful. So, and I think they would literally, the amount of demand in this marketplace to drop below that, they would literally have to shut their doors and not answer the phone and just not do any marketing or showings at all. So yeah, very well occupied.
Thanks, Lee. Sounds like the Lee show right now. That's awesome. I do know you know that property. So while we're going ahead and talking about this real quick, let's go ahead and get to the next screen there. We see the QR code again. Make sure you get your phones out. Oh, not that one. A little one back, please. Let's get your phones out right now and go ahead and click on that. And if you have another question, though, make sure you do go ahead and put that in the chat. It's real important that you get the QR code done now or throughout this presentation. The earlier you get in, the earlier your commitment. And I know a few of you wanted to jump off a little early. That'll allow you the opportunity to do that as well. All right. So along with that, let's go back to Lee. Lee, could you go ahead and talk more about the Northwest Arkansas economic highlights?
All right. So who's ready to go to Northwest Arkansas? Can I get some hands raised in the chat real quick? Who's ready to go to Northwest Arkansas and see it for yourselves? See the amount of immense growth in population and demand for housing that's happening in this marketplace. Well, I have a fun surprise for probably most of you. We're going to actually give you the opportunity to come to the property every year, once a year, in person with us, the active ownership team. Once a year, we're going to invite you, all of our investors, to come to the property with us. Spend time with the managers, spend time with the maintenance folks, get to know the property, check in and make sure the fences look good, all of the things. And we'll have a conference room and we'll review the annual reports and all of the things with you in person for 2 days, once a year. Really excited about that. We're also going to be doing live quarterly Zoom meetings to be able to inform you about the progress of the asset, so that even if you aren't able to go there in person once a year or even once a quarter, you can participate live and ask questions. How's the property doing? So on and so forth when we deliver that to you. So the market, Northwest Arkansas is booming with population growth. It has 2% annual job growth going back over 10 years. The unemployment rate is less than 3%. The average income growth is over 8% annually. By the way, just as a reminder, our rent increase for market was only estimated to be 3%. But guess what the annual year-over-year rent growth has been recently in this marketplace? Over 10% rent growth, and we only estimated for 3%. Do you think we're going to beat our numbers? And the projected rent increase between now, which is a very conservative number, this number was received from CoStar, is projected to be 11% between today and 2027. All right. So we talked about the overall archery market. Let's talk about Fayetteville, the largest municipality, most populated municipality in Northwest Arkansas. So what you see here in this photo, let's look at the photo really quickly. This is a photo of a brand new, ground up, build to rent single family house and multifamily neighborhood. Those houses are not for sale. Those houses are for lease. They're going to rent these homes for between $2,700 and $3,500 per month, everyone. And then the slab that you see there on the left side of the picture is going to be a brand new A-class apartment complex where a 1-bedroom, 1-bathroom apartment will rent for $1,400 per month. Our 2-bed, 1.5-bath, 2-story townhouses with a yard and granite and stainless, we only project to rent for $1,160 to hit the numbers that we're showing you today, just to let you know. So our numbers are very conservative. Why are these people, and so we have the numbers. How far away do you think this property is from our asset? 250 feet away. Less than a football field. Somebody is coming in and building brand new ground up construction and thinks that there's enough people to go pay rent for $2,700 to $3,500 for a house 250 feet away from our property. I love that this is our neighbor. This is not our competition. We are their competition because we will take theirs and we will be the price leader in the neighborhood. Why do they think that they should go do this? Because the median household income is over $40,000. 58% of the people in the marketplace are renters, and the median home sale price is over $200,000. That's why they're doing it, and that's why we want to be their neighbors. And now, micro market. I want to bring Colby in to talk about the micro market surrounding our property.
Awesome. Thanks, Lee. Yeah, so we've talked about Northwest Arkansas, the region, and the MSA. Now we've talked about Fayetteville. Now let's look at what is immediately around the property. So quick little fact for you guys. Northwest Arkansas is actually the mountain biking capital of the world. I know it's hard to believe, but they absolutely love their biking there for whatever reason. So one of the things that the city plans on doing is actually adding a biking trail on West Weddington there. You can kind of see it right in the middle of your screen, just underneath all of the logos there. They're going to add a bike trail on that street that then connects to the main bike trail in downtown Fayetteville, which then goes 36 miles up and down all of Northwest Arkansas between Bentonville and Springdale and Rogers, connecting them all. With that bike trail addition, they're also taking West Weddington from a 4-lane road and putting it out to an 8-lane road, as well as adding cloverleaf on and off ramps. Now, the city doesn't just up and completely take out all that pavement and that road and redoing it all over unless they have a very good reason to do so. And that very good reason is that the area is growing exponentially. They feel that this is much needed. I've spoken with people that are from the area, and the consensus is that West Weddington is always traffic jammed. There has to be an expansion done to that road because there's so many people there and so many people that are moving there. So now the other thing that is really cool about this area, if you look right in the middle of the screen, it shows you all of the other people that are investing in this area. You have Walmart, you have Starbucks, you have Hilton, Holiday Inns. All of those hotels right there that you're seeing are brand new. We also have Drew Brees' restaurant right next door to those hotels. Most of those people don't come in and invest all of that money without doing a substantial amount of market research. They know that this market is going to do extremely well, and that is the reason why they have put so much money into opening all of these stores right there. So I want to turn it over to Dustin to explain to you guys how you guys can get involved in this deal.
Thanks, Kobe. I am so excited. Since you guys are still with us, that probably means that you have a big interest and you kind of want to invest. Or you've already left us to go and already invest with us, and those guys are already taking your spot. Anyways, we've just opened this up for accredited investors, and spots are filling up quick. Don't delay. First thing you can do is pull out your smartphone and scan the QR code right there to get started. And I will show you the next steps on the next slide. Okay, once you scan your QR code, you're going to go and review the offering. And once you review and sign the offering, you can e-sign it. That's going to cue us to go in and look at your accreditation documents. And once your team member looks at the accreditation, you get all approved, then it goes straight to funding. And after you have signed the offering, you've been qualified to be an accredited investor, you go straight to funding. You can wire your money through there. Your kind of a friend that brought you to the webinar, they can help you through the whole process, make it very easy. Once you get the funding done, we are going to be closing on May 10th. And I am very excited about having you guys in this. I can't say enough good things about Fayetteville and the property, and I can turn this over to Charlie.
So hope you guys are getting a lot out of everything here so far. As a quick reminder, I'm key principal and the lead sponsor here. This is my 28th apartment complex that I've purchased over my career. And I want to leave you guys with two big takeaways for the evening. Anytime you're looking at an investment like this, two things you need to look at. The first thing is you want to be able to check boxes. That's very important. How do you know if something's a good deal? Well, you know that because you're able to check boxes. So for this one, it's in a growth area. We already talked about the area. Northwest Arkansas is booming. We are buying these units for under $100,000 each, right? It's a very simple value add. We're going to fence the backyards. It's funny, when I started in this business, you would do everything you could to avoid pets. You don't want a pet coming into your apartment. And now people target pet owners because everybody has pets. So we're going to step in line with that. We're going to be able to directly target pet owners because we're going to have fenced backyards. Almost no other apartment complex in town is going to be able to do that. So that's going to give us a huge competitive advantage. We have 1 bedroom, 2 bedrooms, 3 bedrooms, and 4 bedrooms, all at this location. If you're in the multifamily space, you know what a big deal that is. We're assuming the debt at 4.5% interest. I got a quote from a bank probably about 2 weeks ago at over 8% interest on a loan. So we got great financing in place. This is a candidate for the cost segregation study, which we talked about earlier. You're going to get a negative K1, which means you're going to basically get a tax form that says you took a loss, probably around 50 to 70% of what you're whatever you're investing. So if you're writing a check for $100,000 to go into this, you'll get a negative K1 for probably around $50,000 to $70,000. So that's it. Number one is you want to check all the boxes, and then number two, the team is extremely important. And so I'm super excited to be on this team. Lee mentioned earlier, this is my 4th deal with him, my 3rd deal with Megan, my 3rd deal with Jake. I would not be doing additional deals with them. And keep in mind, we're general partners, but everybody's also a limited partner. So we're putting our cash in as well. That's another actually very important thing that you want to look for anytime you're considering an investment. But the team's done well. We've done great with our other projects. Lee Fjord is all over asset management. So proud to be able to work with him again. And yeah, very excited about that. You guys, we have a licensed general contractor that's been a 20-30 year veteran in the industry who's going to be overseeing our CapEx project. I can't think of a better fit for that. And so I have full confidence in Dave's ability to be able to pull that off. And so, yeah, you know, basically this is my official stamp of approval that we like this property. We're excited about it. Hope you guys are getting excited about it as well. And we want to extend the invitation to have you invest alongside of it. Thank you. Jim, I believe you're muted, buddy. There you go.
Thanks, bud. Yeah, so appreciate it, Charlie. It's always good to hear from you and your expertise on that and your knowledge behind it. So I guess with all that knowledge, everyone wants to know, I've gotten quite a few questions about this. Are the Arkansas Razorbacks ever going to win a national championship in basketball? So I guess with that, we can go ahead and finalize some of this. we do want to make one last push. Thanks for all being here, and get in now. I mean, there's lots of excitement about this deal, and it is first come, first serve, as you guys know. I've been chatting with a few of you on here privately. It looks like quite a few of you want to jump in on that. So make sure you do get in that QR code, and let's jump on it. We'll wrap it up with a few more questions if anyone has anything. Who else has a question for me there? So anything else, or we cover it up pretty good?
I'll just chime in. If anybody has questions, hopefully you'll get off of this and think, wow, this looks like it could be pretty interesting. If you have a question later, speak up. The worst thing you can do is say, I wonder about that, and not ask. We're here to help, guys. Consider us advisors. I'm an open book. Like I say, if you want to talk multifamily investing, I love this stuff. So I'd be happy to chat with anyone, and I know I speak for everyone on the team with regards to that.
Thanks, Charlie. All righty. Well, with that, Lee, you want to go ahead and take us home?
Absolutely. Thanks, Jim. So, I mean, I just can't tell you how excited I am about this particular team, this particular project, the location and specifically, and the opportunity to be able to, spend some great time in person with you guys at the property. This is something that I want to reiterate that is not a very normal thing, that operators allow their investors to come and be at the property in person. Not even just one at a time, but all at once. I want to be able to allow this to be a great networking opportunity and time spent at the property, getting to know us, getting to know the management staff, getting to know the property, getting to know the community. So that is something we put in place for this property, and this deal in particular, to be different than what a lot of the other operators choose to do. We want you to be involved. So please, do reach out to the person who invited you to this event. If you have any questions, please do invest, and I hope to hear from all of you.
Thank you all for attending our webinar tonight. We appreciate all your time.
Thank you.